Hello investors and future investors, welcome to the channel. For today's video, I'm going to show you how to profit even if you're trading in a bear market. Now, if you're new to options or you're just trying to use options in order to supplement your regular 9 to 5, then you so happen to stumble onto the right video. Welcome to Investment Gains. Let's jump right into it. Welcome back, investors and future investors. For today's option strategy, I'm going to show you how you could still profit in a bear market. Now, the option strategies we perform on this channel does not matter whether the stock market is going up or the stock market is going down. There is a strategy that can be utilized in order for you to continue to make consistent income and in order for you to continue to profit during these downtimes. Now, right before we get into that, we're going to go ahead and do one thing. I just need to show you guys a quick portfolio update just so you guys know where we are right now. So let's go ahead right now. I'm going to jump into my options tracker. Usually I do these updates come to the end of the month, but the market is volatile right now. So I just wanted to show you guys real quick how it's affecting my portfolio. So as you can see here, these here are pretty straightforward, but what I want to bring your attention to is one of my positions, which is RGTI. Now, RGTI, I did do a covered call on 2021. And as you can see to the right here, I bought the stock outright. I bought 100 shares at $1,500 and I bought another 100 shares at $16.96. So my average cost is around $15.98. Now, because of the market volatility and the stock dropped all the way down, I think it's trading at $6 and something cents right now. But before it got to that stage, I made a quick adjustment and I set what's known as a stop loss or a limit order to get out when it hits a certain price. Now, my limit order happened to be $10. So once the stock hit $10, all my 200 shares were sold and I lost money. I usually do not lose money, but this is the first time I've lost money a long time. Now, the only way you lose money is whenever you decide to sell your positions. So as you can see here, I'm still holding on to QUBT, and that is also down in my portfolio. However, I have not sold it, so I have not lost anything yet. And I'm going to be looking to double down. What I really want to bring your attention before we get down and dirty with options is that the option premium, these strategies allow you to do. As you can see here for the week, the premium I brought in was $1,017. Even with closing them, I had to pay some money. It still ended up to be $1,017. So when you sell options for income, you always be allowed to keep generating income. So although I lost $1,885, I'm still going to be able to make that back in probably a couple of weeks. Now, as you can see here, these are going to be the exact same stocks for the following week, and the premiums total $1,017. This after it was closed, except for this one right here, is going to be closed on the 17th. Now, just to go down, and bear in mind, I'm just going to run through this real quick. This is not the video for today. I just wanted to show you guys how the market is treating my portfolio right now. So these are the trades for the second week. And as you can see, although the market is down, I'm still able to generate consistent income. And I just changed up the strategy just a bit. I will make a video about this, probably the next video after this one. So although the first week I was able to make $1,000, the next week, second week in January, my projected income is going to be only $389. The reason I want to bring this to your attention is because although it's the same stock, the stock market is extremely volatile. So I had to make a quick adjustment. The adjustment I made is that I'm now able to sell my covered calls at a way higher chance of profitability. And because I did that, my premiums are way lower. Now, although my premiums are way low, I do not mind. The reason I don't mind is because not only am I a trader, I'm also an investor. The whole point of me showing you this is that although the market is down, you're still able to make a decent premium. Now, let's go ahead and get down and dirty with options. So for today's option video, we're going to be using the SPDR ETF, ticker SPY. So I just showed you I made a slight adjustment. So that's what today's video is going to be about. So let's go ahead. We're going to go to Trade SPY options. Okay, so here we are on the SPY options chain, and now I'm going to go ahead and show you the strategy that I'm doing since we're now in a bear market. I don't focus much on this strategy on the station because this is a bearish option strategy, and I'm a bull. I always believe the overall market is always going to go up. They will have pullbacks every now and again, but overall trajectory is going to be up. So now we're going to go ahead and we're going to start this option strategy by going to sell and making sure it says call. Now we're going to go ahead and choose our strike date. I think I do have the 15th, so I might have to change the date. Let's just go ahead and see. Okay, so I do have options already for this date. So I'm going to go ahead and choose a second strike date in order for there not to be any confusion. Let's go with January 16th. Stay to the end of the video. I'm going to show you how to minimize your risk and how to spread out your portfolio value in order for you to maximize your gains. So now we're going to go ahead and choose our sell call, and our sell call is going to be above the current share price. The current share price right now is 582. So we're going to go ahead and we're going to choose the 593. The 593 gives us an 88% chance of profitability. We're going to go ahead and click into that. Since we now selling a call, we're going to receive some form of compensation. That compensation is going to be 0.62 or $62. Each option contract is multiplied by 100 shares. Henceforth, 0.62 multiplied by 100 shares is going to give you $62. This is the first leg of this option strategy. Next, we're going to go to buy, and we're going to go to call, and we're going to maintain the exact same strike date. Now we're going to go ahead and choose our strike price above our previous sell call, and that's going to give us the 594. We're going to go ahead and we're going to click into this one. Now, this time we're going to be buying a call, so now we're going to have to make some kind of payment. The payment we're going to have to make is going to be 0.49 or $49. When we put this strategy together, you get the call credit spread. Now, the call credit spread, like I mentioned before, I don't focus too much on this option strategy because this is a bearish option strategy, and most of my option strategies are bullish option strategies. However, the market has given us an opportunity, so why not use it? So whenever you do a call credit spread, like most of the other strategies we feature on this channel, you will be receiving some kind of income. Remember, on this channel, we focus on trading options for income in order for us to make consistent gains. So we're going to go ahead, we're going to hit continue. We're going to hit review order. Now, just a couple of things I want to point out. When you're doing the call credit spread, you will be receiving a premium right away. The premium in this case is going to be $14.92, or let's round it off to $15. In order for you to perform a call credit spread, you will have to leave a collateral. The collateral in this case is going to be $100. So, of the utmost importance is your percentage return. Like I always say, do not worry about the monetary figure. Worry about your percentage return. So, on this option strategy, you're going to be receiving $15. You're going to divide that by 100. And that should give you 15%. So, you're making 15% on your returns with this option strategy. Now, this option strategy is the call credit spread. When you trade in this option strategy, you always need to be careful. The reason for that is that the market always goes up. So sooner or later, the market is going to show you signs that it's going to get into reversal mode. So in order for you to protect yourself, there's a couple of things you can do. The number one thing you could do is to choose your chance of profitability super high, closer to the 90% chance of profitability. The other thing you could do is spread out your options. So I'm going to show you in 1 second here. Let's go ahead and go back. Let's get out of this. Let's get out to the sell call. Now, if you guys want me to show you this option strategy in complete detail, just go ahead in the comments below and just call credit spread, and I will know to make a detailed video. I know I'm running through it real fast right now. I just want to show you what strategy I've adjusted to now that we're having a bear market. So we're going to go ahead to the 15th. I'm going to show you the calls that I have right here. So if you go ahead to the 15th, you're going to see I should have some right here. Here you go. So one way you could minimize your risk is to put a couple calls on one date. Now we're going to go ahead to the 17th. And then here now on the date of the 17th, you could see I have a couple contracts here. So when trading with a small account, in order for you to minimize your risk, it's highly advisable that you spread out your trades. So for instance, as you saw, I have 2 contracts on the 17th, I have 2 contracts on the 15th. And if the bear market continues to show itself, then I'm going to go ahead and do 2 contracts for Monday. This especially helps when trading with a small account because this avoids your PDT rule or the pattern day trader rule. If you don't know what that is, just put it into Google and that's going to tell you. So the point of this video is to show you that although we're in a bear market, there is still opportunity there to make consistent income. All you need to do is have high conviction on the stocks that you have in your portfolio. If your conviction is high, then simply change up the strategy. If your conviction is not high with any stock in your portfolio, there is no reason why you should keep it in your portfolio. Go ahead and take the loss in order for it to stay in the game long term. Now, if you receive any value from this video at all, go ahead, like the video, subscribe to the channel, But most importantly, if there's anyone out there that's struggling to make money now in a bear market, feel free to share this video with them. And until the next video, keep pushing your investments.